Hey everyone, welcome to Founders 365. I'm with Rick Watson, who is a e-commerce expert, one might say. How are you today, Rick?
I'm doing great, Steven. How are you?
Good, man. I'm very well, thank you very much. Thank you for coming on the show. Thank you for your time, first and foremost. But for those of the people that may not have heard of you or may not have even heard of e-commerce, let's face it, there are some people out there, right?
It's possible.
Can you give me just an overview of what you do within the e-commerce world?
Yeah, essentially, I provide strategy and advice to brands and investors that are taking their first steps into this world we call e-commerce, particularly direct-to-consumer e-commerce, where traditionally, I mean, retail has been around for a long time. Obviously, usually it involves buying big packs of things from manufacturers and then shipping them to retailers in big truckloads, and then the retailer deals with that pesky thing called the customer. Manufacturers have figured out that, hey, it's 2020 and we don't know a thing about our customers. So the whole direct-to-consumer e-commerce revolution is about how do you make things as convenient for customers as possible. And that involves learning a lot of new things that manufacturers many times didn't need to know before.
Yeah, for sure. My first question is, why do you think that some of the bigger brands are so behind when it comes to e-commerce stores? Because I know a few people that run e-commerce stores. I run a couple myself,
Right.
and their stores are like ahead of some of the biggest brands you can think of in terms
Yeah.
of that customer experience. Why is that? Because they should have
Wow.
the money.
It's a good question. The short answer is because they can, for a long time, they could afford to. If you have a $5 billion brand and you've been around for 25 years and e-commerce starts up and suddenly it's 2005 and you build your first website, you get 10 orders, you'll make about $1,000 that year. Meanwhile, you're a $1 billion brand. So no one cares about your business. Whoever's running it, they have no importance in the whole structure. And so as a result, they don't get any investments. And that has obviously changed. And the forward-thinking brands have been investing for some time. But there are quite a number of brands that still operate in a silo between their retail operations and their e-commerce operations.
Surely, with COVID and everything that's happened, people being locked in, buying online has just skyrocketed. It's reflected in like the shares of Amazon and all that kind of stuff. What it was like that? What did they say that Jeff Bezos earned like $170 billion or something extra or something crazy like that?
Yeah, I'm sure he got a lot of extra money in one day.
It has exploded more than it was already exploding, I guess.
Right.
How do you think that because of this behavior that for 3 months people have been buying online, shopping online, not walking into stores as well and having that customer facing experience, moving forward, how do you predict things are going to change then in terms of e-commerce and, let's face it, retail shopping in general?
Yeah, I think there are going to be a couple of major changes. First of all, I think a lot of the underpenetrated categories will accelerate their e-commerce trajectory. Yeah. For instance, if you look at groceries, typically the stats say 2 to 3% online or maybe less, depending on where you are. I think that could accelerate to as much as 10% over the next couple of years, which would be a massive acceleration and a huge category. And I think other categories like maybe beauty, at least in the US, has been traditionally underpenetrated. I think that could potentially increase. I think retail stores will always be with us. I'm not one of those people who think that retail is going away. However, a significant percentage, I would say more than 5% and less than 30% of retail footprint in the US that we know today may vanish.
Wow.
because of bankruptcies, and not all because of COVID, and not all because of 2020. Many of them have been going bankrupt for the past 15 years. JCPenney comes to mind. You know, Neiman Marcus just filed for bankruptcy.
2020 just give them a good excuse to do
it
so.
just gave people a push. It's like, hey, look over the ledge. It's like, oh, sorry, I leaned on you a little bit extra, and so it's a challenge for some of these folks, especially if you have razor thin margins. You know, if you look at the off-price business, if you even beyond off-price, if you looked at Victoria's Secret, COVID started, they shut off their e-commerce site.
Wow. And Victoria's Secret have just, in the UK here, Victoria's Secret UK just announced their administration as well.
Right.
Literally 3 days ago.
It just proves my point, right?
Yeah. But it's so crazy to think that, so for example, in the UK here, we have a huge store called Primark. And I think 2 months into it, the CEO was saying that they were losing 650 million pounds per month because their stores were shut, and they have no e-commerce system in place. For brands like that, how could they have even got to that level without thinking, you know what, maybe we should have some sort of e-commerce section, even if people just want to buy slippers, you know?
Yeah, it's a good question. It's a combination of a number of factors. One is it's investors that aren't savvy. It usually starts at some kind of investment or board level, where you have old school people that have been doing business the same way for 40 years. And I don't know if Primark is that way, but it's very hard.
Primark is actually owned by a food company, weirdly enough.
Right.
So it's a closed store that's owned by a food company. I don't know how it works, but that's the way it is.
Yeah. So if you've been doing business the same way for 40 years, chances are you're not likely to learn a lot of new tricks unless you're a very special kind of culture. And so I think that's where it starts. And so if the management isn't comfortable in this new area and views it as a threat, and investors aren't asking about it, then there's no impetus to do anything. Sure. And so over time, it's not to say staff doesn't come in and say, hey, maybe we should do this. I'm sure there are plenty of people in Primark, I'm sure, not knowing anything about them, that have wanted to do e-commerce. Maybe they've done it before, but it was always shuttered. It was always shuttered after 2 or 3 years. You can almost write these stories without hearing them, because they don't have management support. They don't have consistent investment. They didn't have a business case, you know, for quite a number of reasons.
And then we have, I suppose, we can talk about the extreme opposite of when you see these e-commerce stores that are basically run by one person with sort of an outsourced team, and they are doing crazy good. I mean, it's almost like they're printing money, right?
Right.
But even that bubble there themselves, even that bubble of the drop shippers and the white labeling companies, what do you think about that side of the industry? Is it healthy? Is it not? Where do we stand on this?
Well, I mean, e-commerce in a lot of ways comes down to business model, and a lot of people are shipping more products than they can pay for. They're spending more. I mean, their two biggest costs in e-commerce outside of the cost of the goods, which as a drop shipper you're not paying for. One is marketing, the other is fulfillment. And if you are spending more in those areas than you're charging the consumer, and you're offering free shipping at the same time, there's probably not a business model there.
No.
And so you need to be subsidized by your investors for some time. And there are plenty of those companies that have lasted quite a while, but it doesn't mean they're good business models in terms of producing profitability. So drop shipping, look, the problem with drop shipping is you've got absolutely nothing unique. And so if you weren't there first and at scale, then you have nothing unique, and anyone else can
10 years behind.
Yeah, and anyone else can source the same suppliers that you can. And so when someone asks me, like, it's so funny, sometimes I get questions like, should I go into drop shipping? Usually I advise no. Like, I would much rather someone starting e-commerce start an affiliate business first. Like just start writing content, start recommending products, build up an expertise, build up a following. Then you have an audience. You have something. Like that is something that no one can take away from you. But if you're a drop shipper and you're paying money to Google, you really have nothing. You're renting your whole business.
Why do you think it's so appealing? And why do you think drop shipping seems to be that silver penny on the online when you go in these e-commerce forums and it's all people are talking about, and yet you very rarely now, like you said, see people actually killing it on it?
Yeah, no one wants to do any. Well, first of all, it's expensive, and it takes a lot of time to do anything.
Margins are tiny.
Yeah, so it's expensive, and it takes a lot of time to develop your own products, to find suppliers, to work with manufacturers. Who wants to spend that kind of time?
Yeah. Do you think entrepreneurs have got lazy then?
Look, I think there's always a gold rush in something.
Yeah.
And you can look at any business model and look at, before it was .coms themselves, right? You would sell ads on your website and you didn't have to make any money. And Yahoo, because they had 20 million viewers or 20 billion viewers, people thought they were making money. Like, well, you're not really making any money. And dropshipping has come the same way.
So he had 1 million pixels and he sold every single pixel for $1.
Right, exactly. So I think, look, there will always be the get rich quick segment out there, and some of them will work because usually the ones that work are early. For instance, if you look at, there's a business called, and I won't say they're a get rich quick segment, but it started as a scheme almost, like Wayfair in the US, massive retailer. A lot of people don't realize that 10 years ago, they basically were born from a Google hack. They had like 250 domains, each with a keyword. Yeah. You know, like barbecue pit covers.com or, you know, brown TV stand.com. And they would build one-page websites for each of their products, and they had 256, like however many domains. Yeah. But you can't run a business on a Google trick forever, right? So that's
still possible to do that. Right. Domains that would come out of it.
Right. It's possible.
Yeah. So moving forward, then, where do you see the opportunities in terms of what do you think? So you obviously work a lot with the investor side of things. Where do you think that they're going to be looking to put their money in because of what's happened, I guess, because of the possibilities that are opened up?
I think I see a couple of areas. One is I still think no one wants to own inventory. So the idea of having a dropship or a marketplace model is still valuable. But I think to do it in a private label way where you have more control over what's going on, and it's not just the same thing that everyone else is doing is valuable. I think the opportunities are clearly in underpenetrated categories and categories with incumbents that aren't as nimble. I still think there's plenty of those businesses. I think in the coming out of a situation like this, the off-price market is ripe to be completely reinvented. Just completely reinvented. After 2008, we invented a whole new category of online retail called the basically the guilt and the vente privées, right? Sure. You know, with these flash sale sites, like completely didn't exist as an idea. And then there was a whole bubble of flash sale sites that, you know, combined and consolidated. So I think off price, you will see some, integration because some innovation, because if you look at, for instance, TJ Maxx in the US and TK Maxx in the UK, their e-commerce sites are also shut off during this time. Right. So they don't have an e-commerce strategy either. And that seems not smart.
It's crazy to think, like we said, that there's these massive brands with the issues that the smaller brands don't have, in the sense where they've got the inventory, they've got the cash to do so. You hope, let's just assume they do. Right. And they've got the connections in terms of delivery and all that kind of stuff. So there's very little work for them to do to turn that switch back on. There must be huge opportunity moving forward for people in the online space that don't want to have inventory, but you've got all these businesses that have gone bust over the last 3 months, that were sat there with their stores full of stock.
Yeah.
How do you get hold of that? How do you think the opportunity for those sort of people to get hold of that stock and sell it?
It's a good question. I mean, mostly it's liquidators, resellers, and jobbers, and these things. I mean, that industry is relatively consolidated. At least in the U.S., it's relatively consolidated. I mean, you know, for instance, the companies that buy Amazon and Target returns, you have to accept, you know, fleets of truckloads of product, and you can never say no, right?
Yeah.
And so those sorts of companies are
pallet
used to, they're you know, you're not buying a pallet at a time, right?
Yeah.
And so I think those are interesting. I think the other investment thesis that happens is, to your point, you have all this product, and you kind of have two situations. Investors that are looking at brands that have been around, but maybe the problem wasn't even the brand. The problem was the real estate. Like, we had too many stores.
Yeah.
Like,
rent was high.
10 times too many stores, and we were over leveraged in debt, but everyone loved the name. People used to love it. And so what we've seen through the dot-com bubble is that quite a number of investors have gotten skittish about inventing a new brand from scratch and trying to sell that to consumers through paid search and AdWords, right? Because, you know, you have a company like Casper that spends, you know, however millions of dollars, not profitable, go public, and they still have less than 20% unaided awareness in the consumer. And so if you have a brand that people know, but the business model is bad, or they have too many assets, that's, to me, smells like a lot of investment opportunity. You know, there is actually a retailer in the U.S. called Dress Barn, which used to be kind of a pretty off-price discount clothing store in the U.S. and maybe B and C malls in the U.S. I think I can say that pretty confidently. And they've reinvented themselves. An investor bought them in the last year, and they've reinvented themselves as an online-only model. Like, no stores, no nothing, no inventory, just the name and kind of a dropship marketplace, right?
Yeah. But with the name aspect, then, because there's it comes back to that mentality of the old school versus new school. Old school is, let's keep the name. It's been around for years. People like it, etc., etc. New school is sort of the Casper, and one that comes to mind is probably like Dollar Shave Club, where they're like, look, let's just do sort of a ridiculous marketing campaign, and our audience, because their audience is typically probably a bit younger anyway, are going to buy into that. So again, maybe from an investor's point of view, how do you manage that side of working on the e-commerce versus the ones that are going to buy online, which is probably a younger demographic anyway? Maybe that's changed now because of COVID, but probably not long term, versus the whole mentality of it's a really traditional, comfortable, people know it name.
Yeah. I mean, it's a good question, and you have investors on both sides. You know, I will say, and you probably saw this as well, we kind of reached, I would say, peak digitally native brand about investor point of view from about 2 years ago.
Yeah.
And that was like every new category. Like, people would, I would go to dinner parties with friends, and they're like, tell me a product that's between $200 and $400 that you really love, because I want to make a brand next week that's going to knock it off, and it's going to be half the price. So it's going to be not cheap. It's going to be $100, but we're going to undercut the $300 price. And so it got too kind of frothy, but I think
too cutthroat.
Too cutthroat. And I think people got the idea that, well, if we already know all these people are using Shopify, they're using the same agency, they're using this and that, so maybe it's a formula. And so, like, people started plugging stamping out templates, and consumers never work that way, right? The product has to work. You have to offer great service. You have to be smart about marketing. And so I think the digitally native brands that are successful now are not spending as much money. They're spending profitably. They're watching their advertising. They're making sure they're not overspending on fulfillment. They're not always offering free shipping. So you have to really watch your business model, because investors aren't the same that they were 5 years ago, right?
For sure. I think there's been a huge shift, like you said, in terms of investor mentality, but also founder mentality of, you know, it like you said, some investors are still doing, there are still some companies like this where they're just pumping money into it. And a company becomes to that level where they can't let it flop, right? They pump, there's so much money invested in it that even if it's, I mean, a classic example in the retail unit, I'm guessing it's classed as retail, but more commercial, but obviously like WeWork, so much money pumped into it, they're not going to let it fail overnight.
Right.
I can't think of an online brand in the last couple of years, like you said, that have really, I guess you could even say, like, be brave enough to really try and disrupt that side of things. Again, I'll come back to that Dollar Shave Club. For me, was one of the first online only brands that I saw that were like, no, they're doing something different. No, they're doing the price tagging, their price tag marketing ideas, all that kind of stuff. But in the last 2 years, like you said, I can't think of a brand that's done something like that.
Right. Yeah, it's hard to make that big of a splash. There are quite, if you look beneath the surface, there are quite a number of digitally native brands that aren't necessarily only digitally native anymore. I think most brands have realized there needs to be not just online, but there needs to be retail.
Sure.
You know, if you look at some of these companies like, you know, Tommy John, which is a men's brand, Roan in the US, they have retail pop-ups in stores. Bombas socks, you know, which is super popular and like a very profitable brand in the US. So
it's weird to think that
some of these you think are new, right?
Yeah. Consumers start to crave actually seeing the brand on the high street or in malls, even if it is just a pop-up store.
Right. Yeah. It kind of reassures you a little bit. Like,
yeah, exactly. It's that consumer mentality, right? I'm guessing after this, you know, when lockdown and all the kind of goes back to as normal as possible, whatever that normal is,
right,
people are going to be craving to see the online brands that they've been purchasing off for the last 3 months back in store.
Yeah.
But are they going to be ready for that? Is there enough scope in the market to be able to have that balance, do you think?
It's a good question. You know, I think retail is going to come back a little bit slowly as consumers get more comfortable with shopping again. I was looking at a survey yesterday, and consumers were saying, "What are you most looking forward to after lockdown?" And you had like all these choices, but the one I thought was most interesting was the difference between restaurants and retail. And restaurants were like 2 or 3 times higher than retail. Yeah. Basically, we just want to go out with our friends and get drunk. I mean, that's what we want to do. And we want to do that much more than we want to shop. But it doesn't necessarily mean that shopping won't come back. I just think that, like, in terms of the excitement, pent-up excitement, right?
Yeah. People have been locked in their houses, in their apartments, and they're craving that round the dinner table conversation. Right. I mean, there's not much to catch up with other people. It's like, what have you been doing for the past 3 months? I don't know, not much, chilling at home, you know. So I'm sure those conversations will be fairly short anyway. For you as a business owner, then, what's your plan? What's your growth strategy over the next sort of 12 to 18 months to continue this business and to continue working with clients? Have you seen any opportunities for yourself to get into where you couldn't get into before?
Yeah, I think the good thing about this time, and so I started my business a year ago after being in e-commerce for a long time. And so I had the benefit of being an operator for a long time. And so I don't think like, I didn't wake up and saying like, oh, e-commerce looks big, maybe I should be an e-commerce consultant. It has been kind of the opposite for me. It's just something I love doing that, like, maybe I want to work for myself finally after working for someone else for all these years. And so for me, I saw starting my own business that e-commerce is not going away anytime soon.
No,
that's number one.
Never.
And number yeah, and number two, if you aren't already there, you need more help than the average person.
Sure.
Which means like Amazon 25 years ago, like back to 97 or whatever, it's Silicon Valley startup mentality, right? You hire the best engineers, you overpay them a lot of money, and you build everything from scratch, and there's no off-the-shelf tools and whatever. We're not in that time anymore. Like if you're a big retail, like one of these retailers that doesn't have e-commerce today, like Primark, like the last thing you should do is ever like build your own e-commerce platform, right, from scratch. Like don't do that. If you're listening, Primark.
I mean, if you are listening, Primark, do let me know, because
yeah, in the chat, add us on LinkedIn or something.
We can both hook you up with different things here.
Yeah, exactly. And so the short story is, from a consulting point of view, you need to know where to start. You need guidance. You need help getting things off the ground, which is really good for a consulting kind of mindset and someone who's been a business owner and operator before. I think I think that will only continue to increase.
Sure.
So to me, that's kind of how I think about my opportunities. Is it's not the leading edge people that, Walmart's not going to call me up tomorrow. They have plenty of e-commerce, or,
if they do now, it'd be really freaky.
Yeah, exactly. Or Boots. I don't know if Boots in the UK has a lot of, e-commerce or not. These people aren't calling me, but the people that are good brands that should be there and have the money and the discipline to see like, this is how it needs to be done. They're like, oh, this is how it works. Let's do it. That's the sort of the perfect opportunity for me.
Do you get frustrated, sitting in that consultant's chair when you see like the marketing agencies try and run it all for them? Because I've seen that as well. I've seen, marketing agencies creating this offer saying, look, we'll help you sell on e-commerce because all you need is a good ad. You must be pulling your hair out when you see things like that, and it's just not going to work.
It's a good question. And actually, I think a lot of e-commerce starts at the business model. Like, what is your business model? What product do you have? How much are you paying for it? How much does it cost you to intake it? What are your unit costs to get it out the door? And then how often are you going to turn it? I mean, that's the core of e-commerce. And then obviously you need to bring in people in the door. And then what's their purchase frequency, so you can figure out what's their lifetime value. I mean, that's the core of e-commerce. And to say it's a good ad, yes, part of it is a good ad, right? But
it's not the end all.
But it's definitely not the end all. That's not to say you can't count businesses that were transformed by ads. But if you get 1 million more orders and you're losing $5 an order, then you just lost $5 million. So
it adds up quick.
It adds up quickly.
How many e-commerce stores do you think are leaving sort of that much cash on the table?
Quite a number. Quite a number.
Yeah.
I think the number of e-commerce only brands that are actually making money is less than you might think, I believe.
Oh, of course, yeah. That are just not plowing it back into it, trying to wait for that windfall of sort of organic growth almost.
Yeah,
I think we're in this weird phase of time at the moment where people think that paid marketing, sure, it has its place, but it's dangerous when you think paid marketing is the only place.
Yeah.
You've got to match that up with your organic stuff, your email list, all these other avenues to get those continued sales, build those relationships. It is just an interesting time, I think.
Right. No, for sure. I 100% I agree.
Yeah. For you then, Rick, if someone sat across from you now saying, look, I've been running a couple of years, we're making decent money, or maybe not even a couple of years, maybe they're new into it. What would be some of your tips for them that they can implement into their business that is going to actually see some growth in terms of the e-commerce, the sales side of it, that end dollar?
Yeah, I mean, I think the biggest, there are 3 big areas where you can make money in e-commerce. One is marketing. Are you spending too much money on marketing or too much per customer on marketing based on their purchase frequency? And so if you're paying for first-time buyers that don't become repeat buyers, it's a huge money sinkhole for any e-commerce business, right? So that's one area to look at. Second is fulfillment costs. A lot of people are overpaying for fulfillment costs and don't know it. They're choosing the wrong provider. They're paying too much for shipping. They're shipping orders too fast in some cases, which is hard to imagine. They're giving away too much free shipping because they think it's the only way to get new customers, which obviously people like free shipping, but
it looks, I think the danger of that from a founder's point of view, or sales director's point of view, it looks really good on the back end portal,
right?
Yeah, and that's exactly about it.
Yeah, and so I think that's the second thing. I think subscriptions, I think, are here to stay. I think it's an interesting thing to consider because the thing I love about the subscription business is you wake up in the morning, you already have money in the bank account. Like you don't need to find those customers because 90+% of them are there. They're going to buy next month if your product is good. And so you don't need to pay for that ad. You already have their credit card. You just need to charge their card. Like you need to not fail at charging their card next month. That's what you need to do, right?
That's your only job.
Right, it's your only job. Just don't fail at
that. And even that is automated now. So if you really do fail at that, you just give up with e-commerce.
Right. You probably weren't meant to be there.
I can imagine there's still that one person just writing down the credit card numbers every month. Be like, I've got to charge John. Yeah. With what they call it, like magnetic paper or something.
Yeah, exactly.
One last question for you then, Rick. In terms of the subscription-based type businesses, what's a product that you can see or predict that you think still has huge growth? And I know that's a really big question and a super vague question, but I'm just interested because you said it. So this is great.
Yeah, it's a good question. I don't know the answer. Like I don't, unfortunately, sometimes I actually get asked like, hey, I'm considering starting a new business. What should I do? I'm like,
yeah, of course.
I don't have a pile of ideas sitting here. What do you think about the top one? I'll give you the top one.
Yeah, exactly. Just sell those ideas dollar by dollar.
Yeah, exactly. So I don't have a bucket full of billion-dollar ideas, unfortunately.
I think there must be a really good opportunity because of remote working has completely changed. I think there's a good opportunity for companies that still want to combine their team together on that Friday afternoon from home. So whether that's a subscription like beer service or something like that, right? Where normally on a Friday afternoon, maybe they'll go to the local pub or bar, but now they're all at home. And I think people are missing that. I think that could be a potential
I would sign up for this service. Beer delivered to my house every
I'll send you a link in a couple of days
please,
when I set up the website and Shopify. I do think that's a big thing to do. Maybe afterwards we can chat about names and I'll get cracking on that.
Right. Yeah.
But Rick, listen, if anyone wants to sort of like get in touch with you, find out more about what you do, perhaps get your advice in terms of how they can grow and more like streamline and actually create a proper e-commerce business, what is the best form of contact for you and them to get to link up?
Yeah, there are a couple of ways. You can find me on LinkedIn. Just search for Rick Watson e-commerce. I'm sure I'll come up. My website is rmwcommerce.com, or you can reach me in the email at rick@rmwcommerce.com.
Lovely. Rick, thank you so much for coming on. I am really looking forward to just seeing how the e-commerce scope plays out after this, and I'm sure we'll be back in touch and keep in touch to sort of spread gossip with each other about what's going on in the market.
Love it. Thanks, Steven. I had a lot of fun.
Thank you, Rick. Thanks, everyone, for listening and watching. This has been Founders 365.